Today's explainer video will be focusing on Meta platforms and the recent stock price movement, using the company's earnings report to show how financial performance is assessed in public markets. I will be sharing commentary here in this video using visuals and visual presentations to explain this topic. Always remember that this video is purely for educational purposes. It is not intended to promote or to criticize. Rather, it's for educational purpose.
Meta Platforms is the parent company of major social media services, including Facebook and Instagram. It generates most of its revenue from digital advertising, and its financial performance is regularly reported every quarter. Investors and analysts closely watch these earnings releases because they offer a snapshot of how well the company investments. A company's stock price reflects collective expectations about its current performance and its future prospects. When results are stronger or weaker than expectations, stock prices often adjust accordingly. In its most recent quarterly earnings report, Meta announced that it earned nearly $60 billion in revenue and about $22.8 billion in profit for the quarter, figures that exceeded many analysts' expectations. As part of this announcement, the company also revealed that it continues to invest heavily in technologies like artificial intelligence and data center infrastructure, which contributed to higher costs during the quarter. After this earnings release, Meta's share price rose, climbing more than 8% in aftermarket trading, reflecting investor sentiment that the company's performance was better than anticipated. At the same time, Meta highlighted that its family of apps, including Facebook, Instagram, and others, continues to reach billions of daily users, and the company is planning further investment across its technology and platform ecosystem. Stock price movements like this illustrate a common dynamic in financial markets: earnings expectations versus actual results. When a company reports revenue or profits above what analysts forecast, stock prices can rise as market participants update their expectations. Conversely, if results fall short, prices can drop. This event also reflects how companies balance current profitability with future investments. Meta's continued spending on technology, even as costs rise, signals strategic priorities that may influence investor sentiment. Understanding these forces, earnings data, investment plans, and user engagement metrics gives a clearer picture of how publicly traded companies are valued and how their stocks behave. In summary, Meta's recent stock increase followed a quarterly earnings report that topped expectations on key financial metrics. This response underscores how financial results and business strategy updates are incorporated into market valuations. Over time, patterns like these help illustrate the relationship between business performance and stock market reactions in a global context.